Alright, so welcome back guys, my name's Take Note and I'm back with another video this week to analyse the US30 chart. In this video I'm going to go over the US30 chart, tell you what I think is going to happen over the next couple of weeks. I've been away for a few weeks, nevertheless let's get back into it. So obviously this is the US30 chart and we're currently on the weekly chart. As you can see, price has been in quite a steady uptrend since pretty much April 7th, where price has pretty much rallied in what we call a V-shaped recovery. A V-shaped recovery is where the market crashes, and then we have a V recovery where price literally shoots all the way back up, and we end up back on the higher side of the range. So price did decline aggressively, and we rallied all the way back up. And we haven't yet reached all-time highs on US30. That being said, if we take a look at the Nasdaq has reached all-time highs following the V-shaped recovery. Same thing with the S&P 500. So where are we expected to go on the US30 chart? Let's get into that. So if we jump onto the daily chart, the first thing I want to do is just draw a few key levels onto the chart so you guys can take a look at where we are. So we had the massive rally from April, and we had a few pullbacks, but this is a key level on the chart. This is an order block unmitigated, so this level of price needs to be mitigated. That means price is going to be drawn into this level, so that's one of the next places I'm expecting price to go to. If we take a look deeper into where we currently are sitting in regards to price action, we're actually resting right here in this area right here. So that means price has been trading in a range pretty much for the whole of July. Price has just been trading sideways, and we can see that from the 2nd of July, price has just been sitting in this little range of an area. It's just been going back and forth, upwards and downwards within this range, and this area has been quite annoying to trade if you're a swing trader like myself, but it don't matter. We can still profit from this market as long as we know what's going on in price. And what I do want to do is just go over what happened with price over the last few weeks, just so you guys have an understanding of how to trade these markets when the markets are actually trading in a range as it is doing at the moment. So when price is trading in a range, you want to be able to identify premium and discount levels within the range, but not just that. You want to be able to identify areas of manipulation. So the first thing we'd want to do is try and figure out where is institutions going to try and push price to get the best price for their trades. So what they do is they force price into a premium, and then from the premium level they sell it into a discount, and we see that right here. As you can see, we had a market structure shift here. As price shifted to the downside, price came back up and retested this level. After that, we saw a massive decline from this level. The same thing happened here after price came to this level and manipulated around this level. We then had a market structure shift at this level again. Price came back down to this order block right here, and as you can see, price bounced right off the order block here, and price came back down to here. After price declined from the order block, if we take a look at the weekly chart, what we saw was we had a fair value gap on the weekly chart right here. And if we jump back onto the hourly, we can see that after we bounced off of this order block, we came that deep into this discount area where the fair value gap was resting, and institutions bought price all the way back up from here, back into the premium part of the range again. And what happened when we came back into the premium? We took our level of liquidity up here. We had a market structure shift on the hourly chart, came into this order block right here, and this gave us a perfect entry to try and short the market down. So as you can see, price has just been bouncing from a premium down to a discount or to our fair value gap, up into a premium, and now price rejected off the premium, bounced off our fair value gap, and now we're targeting, I believe, our area which needs mitigating down here on the daily chart. And if we jump onto the daily chart again, we can see this level is actually acting as a magnet to try and draw price in. And when price acts like a magnet, we tend to, because we're trading in this manipulated consolidation area, for some reason price tends to sweep liquidity, because the institutions want to try and get as many people into the market bullish before they start pushing price down aggressively in an attempt to target our area that needs to be mitigated. And the reason I say that is because if you take a look, on Thursday we had this market structure shift right here, which would have confirmed to people that the market is ready to go higher to target all-time highs, but we haven't yet mitigated this zone right here, and that's why we had a rejection off this level here, and now we can see price probably going to continue its downward trend. This mitigation, this failure to continue higher, is confirmation that institutions are forcing price down. So what I'm expecting to happen over the next week or two is for price to go down over the next few days, breach into this fair value gap which has already been rebalanced, and now we can see price come back down to our mitigation area. And once we mitigate in this area, we should see an aggressive buy and market should rally higher. This all falls in perfectly in line and with the news, and I'm going to show you that really quickly. If we jump onto the economic calendar for next week, we can see that, you know, this week that's coming up, we haven't got much news, so I'm just expecting price to continue to trend lower. That being said, if we go on to the following week, we have quite a lot of news, so this is going to be an extremely important week. And for this week, I probably recommend most people just don't trade this week, just take the whole week off, because from Tuesday, Wednesday, Thursday, Friday, all of it's going to be important. As you can see, we've got jolts on Tuesday, we've got the Fed funds rate, which is extremely important. We want to know whether or not the Fed cut. If they don't cut, we want to see what happens in the press conference as to why they haven't cut. Um, then on Thursday we've got PCE, which is also really important, and then on Friday to end it we've got non-farm payroll. So this week is probably going to be a week where there's a lot of volatility. If you do trade, I would say just try and trade with a smaller lot size. That being said, if price just trends lower for this week, then going into next week when we get our CPI release, when we get our Fed funds rate release, I mean, and then we get our non-farm payrolls, we should have our catalyst to see price rally higher. So that's what I'm expecting to happen over the next week. But in these type of market scenarios where price is trading in consolidation, you want to have certain levels marked out. You want to understand where the fair value is, where institutional investors are looking to position, which is here. You'd also want to look for where they want to try and exit their positions, especially if they're trying to force price back down into our level of mitigation, which was right here. So what the institution's done, they positioned long in this area. Then they forced price down when we got into a premium after sweeping liquidity at the highs. And then from sweeping liquidity, now we should be targeting our area of mitigation down here. And it's just going to be a clean run because, as you can see, there's not much levels of support to stop us. Once we get below this level here and we get below this level here, there's pretty much nothing to stop us from getting back down to our area of mitigation down here. And this is an order block that hasn't yet been filled on the daily chart. So that's what I'm looking to see into next week. I'm looking to see price continue to head lower into our unmitigated fair value gap, unmitigated order block, and rebalance all these fair value gaps, and then we can start trying to see price go higher. That being said, there's no guarantee that price stops here. There is also a chance we, come back down and sweep this level of liquidity down here, but there is no guarantee because of how far we've gone away from it. There's a chance that price just gives up on this level. That being said, if we do come back down to here, then these are the two areas you'd want to buy at. You want to buy at this level here, and you'd want to buy at this level down here if price gets down there. So manage your risk effectively. I hope you found value in the content. I'll see you in the next one.